All right. So now I would like to introduce Miss Shanay Wise. She is one of SouthFair's homeowners in our Fair Park Estates development, and she will share about her homeowner experience, kind of how she got started, and also how she's leveraged being a homeowner with being an entrepreneur. Hi, Miss Wise.
Good afternoon or early evening. Thank
Right,
you for
right.
having me. I appreciate it so much.
Yeah, no, thank you. So I'll let you just talk freely and get started, and I may pose some questions in between to get some clarity to some of our folks.
My goal actually was always to be an entrepreneur. That's always kind of been in me, even when I was younger. And we actually moved to South Dallas in 2013. And subsequently, just literally down the street in an apartment that I can walk outside my house and look to the right, and that's exactly where I was living. And I just knew this was somewhere where I wanted to live and raise my children. This neighborhood reminded me so much of the neighborhood that I grew up in Arkansas. And so I was fortunate enough in 2018 to close on this property here. This January actually made 5 years. So I have been here in this residence for 5.5 years. Going back to the start of my entrepreneurship, I've been cooking and baking since I was a young lady. My grandmother inspired me in a major way. She passed away in 2007. So when she passed away, I felt it just necessary to honor her. And so I basically launched my catering company to pay homage to her. My goal was to prepare food like she did, home cooked from the garden, from local farmers, and just bringing people together with good food. And so that's how I launched my company. And our goal was basically to find other kids like my son, that's an entrepreneur as well, and kind of train them and give them the opportunity to just learn the life skill of cooking. Cooking is a life skill. So that was my opportunity to kind of engage him and give him the opportunity to see what entrepreneurship was like at a young age. And just kind of moving forward after we came here, right? But actually, the year before we came here, the city of Dallas passed a law that you could have a bakery cottage. So, bakery cottage is whereas you prepare certain items in your home versus having to go to a commercial kitchen. And that was a really big deal for home cooks such as myself, because I live in South Dallas, so unfortunately, we don't have reach with commercial kitchens. I would have to go all the way up north or something like that. So passing a law like that in the city of Dallas helped home cooks such as myself have the opportunity to prepare items that I could sell, that I could package. You know, there's still criteria, although I do them at home, but that will give me the opportunity to not have to rent a commercial kitchen, that I could bake and cook things here and still have the ability to sell. And so this house played a huge part in that. When I first moved in, I don't even think I was here 90 days. And oh my gosh, Annie helped me. Was it CBS, NBC? Who came to interview me? I can't remember.
That was Steve Pickett with Channel
Steve
11.
at
Yeah.
11. Steve Pickett came, and it was just a whirlwind. You know, sometimes you're going through all of these things in life and you don't get a chance to stop and be like, wow, this is awesome. I have a house now and exactly where I want to live, and I'm able to do my business. So when he came, I got to really look at it and say, wow, SouthFair provided this opportunity for me. And it didn't start when I bought the house. There were workshops, there were classes. They were telling me what I needed to do, what I not needed to do, connection with the city. It was so many components that helped me to actually close on my house. I needed some education. I was a second time buyer, but it was a different market and things were different now. And I was in a different city and county. And so after we did the news piece, it was very helpful for me to just say, wow, not only do I have a catering company, but now I have a product line that being able to own my home gives me the opportunity to produce here in my home and make a really, I mean, a really great career doing that. I was working full time, but once the time came where COVID came and everything shut down, and I'm like, whoa, I can't cater. However, I still had the product line, still have my home, which meant I could still make money day to day, cooking and baking and selling my products. And being a homeowner played a significant role in that. I would not been able to do that because at the time everything was closed. You couldn't go to a commercial kitchen. You couldn't stand, nobody was doing catering events. It wasn't happening. But we were still able to bake and cook inside of our homes and sell our products. And if I tell you, that really sustained me through 2020 and 2021. It really did.
Oh, that's great. That's great. Thank you for sharing those pieces of your story with everybody, Miss Wise. Thank you. Can you talk a little bit too about the home buying process? You were with SouthFair, and so you had support, going through that. But becoming a home buyer can be an intimidating process. You just want to talk about some key points there that you took from that?
There were a lot of different things that I needed to have in order to purchase. And SouthFair's workshops helped me to understand what I needed, what my credit score needed to look like. I wanted a Black builder. Let me just be clear. I wanted a Black builder. I didn't think that that was possible. And everybody kept saying, you're not going to find a Black builder. SouthFair had a Black builder, referred me to him, referred me to Steve, which was actually the realtor, and he was awesome. But I had knew Steve prior, so it was just a beautiful connection. And then he referred me to someone else, which was the mortgage company. So it was this whole triangle, and it started with SouthFair. And I remember a little bit nervous about purchasing my second home because my first home, just being honest, I was foreclosed on. And I really want to reiterate that. I got caught up in that whole Bank of America scandal, just being honest. And I got my house took for not having support, not having the knowledge that I should have had as a homeowner, just being honest. So I was really scared to purchase again. And I didn't want to. I was like, no, I just don't trust the process. But the mortgage company and Steve and SouthFair made me understand, no, that's not going to happen. And we're going to make sure you know everything that you need to know. And I was very nervous about purchasing. And after I had all my ducks in a line, and the first thing the mortgage company, she's like, let's just run the application. The worst case scenario is that I then have to tell you what you need to do in order to purchase. Ran application, I was approved. Not only was I approved for the home and the amount that I needed, but I also got some help from the city, which was very helpful because I needed it. And that was not a program that I knew anything about. And I would not have known about that program if I was not put into that circle of education with SouthFair and the mortgage company and a realtor.
Yeah, you did a very good segue into Tammy, actually. So thank you for that. But yeah, just the name of the game and kind of what Ms. Wise is reiterating on is that um, leaning on an organization such as SouthFair, a nonprofit organization that can help you through the process. Because as Marianne can speak to, we kind of help take the brunt of that fear for our home buyers, because we get to have the lender tell us sometimes what the buyer needs to work on, and of course it coming from us is a little bit softer than coming from a lender. And then Hario, he can speak to lenders aren't the big bad wolf. They're here to help you as well. But no, thank you very much. Do you have any questions for Shanay? And while we're seeing if we have any questions, Marianne, talk a little bit about how important it is with that post purchase after you close, how you continue to stay connected to SouthFair or an organization that can to help you through that process as well, even after you become a home buyer. Okay, you're muted.
Sorry. All
Oh, there
right.
you go.
Thank you so much. But anyway, that's another feather in our hat for SouthFair, that we're able to offer free home buyer education that's preparing you for your home, and then we don't lose track of you. And like I said, whether you buy from us or not, we will keep up with you, and we encourage post purchase education. So the education really never stops. The credit that you need, Ms. Wise can testify to this, the credit that you need to obtain your home, and so can Hario, you're going to have to remain that same credit after you get your home, because 5 years into the game, you could lose your water heater, something could happen to the plumbing, God forbid a tornado came through the first year and took the roof. So there's a lot of education still to learn in the post-purchase. And then also to remain financially stable and responsible with your savings continuing, especially if it's automated, leave it alone. Maybe you need to lower it a little, but leave it alone, because even warranties sometimes have some out-of-pocket monies, and then there are things you may not have warranties on. So post-purchase education is very important, insurance, and you'll see that a lot of our workshops reflect both of those two subjects. And then, of course, we're very strong on financial literacy, and we'll speak on that more, because we take our financial literacy down to kids ages 5, 6, and on up. And Mr. Wise, or Dallas Wise, will be able to attain at one point the importance and how he reached from his goals, also from learning from our financial literacy for teens. And this young man even attended with Miss Wise to the adult classes on Saturdays and answered all the questions ahead of the adults. So that's a feather in our hat also. Thank you, Eddie.
Thanks, Marianne. All right. So if you have any questions for Ms. Wise, please post those in our chat. We will move on to our next speaker. Thank you, Ms. Wise. We appreciate you once again. Hopefully you'll be able to hang
Well,
on just in case some other
yeah,
questions come up.
no, you're good. I'm here.
Okay, thank you. Okay, now I'm gonna let Tammi Southall introduce herself, and she's gonna talk about the money you've been waiting for, that down payment assistance. Hi, Tammi.
Hi, hello, good evening, everyone. My name is Tammi Southall. I am housing program manager with the City of Dallas, Housing and Neighborhood Revitalization. My responsibility is I'm over the administration and the daily operations of the Homebuyer Assistance Program. I'm going to share my screen with you, kind of go through how this whole process works. Give me a second here. Can everyone see the presentation?
We can.
Okay, good deal. Okay, awesome. So just a little bit of history about this program. Let me go change my view, go into full screen. Okay, hold on. Give me a second here. Okay, I'm just gonna move, change slides, sorry. Okay, so just a little bit, we're gonna talk about the background history of the program, what its purpose, the purpose of it is, what are some of the requirements for the applicant, the property, how we determine funding, and then how to apply with us. So a little background, the program has actually been in existence for over actually 31 years now for the City of Dallas. And we're here to increase availability of affordable housing opportunities and help support neighborhood and community-based organizations and preservation. I'm sorry, hold on, wrong direction. So we're here to assist home buyers, low to moderate income families with homebuyer assistance with down payment, closing costs, and principal reduction. And it is for home purchases in the city limits of Dallas. Some of the applicant requirements for our program here, you must be a U.S. citizen, a permanent resident, or eligible immigration status with a valid Social Security card. Your household income, and when we're looking at income, we're looking at income that comes into the household. It must have a projected annual household income at or below 120% of the area median income for Dallas. And we'll talk about that in a little bit more. The home buyers must have, if you are employed, you must have continuous employment history for at least 6 months. If you're self-employed, we need to see that you provide at least 2 years of tax returns. And then income determination, once we've made that determination, it is valid for 6 months. Now, DHAP has an extension of 3 different homebuyer assistance programs, and the income requirements vary among each program. So we'll talk about that next. The other requirements for the applicant: you must live in the property as your primary residence. You cannot purchase as an investment property. You must own or occupy the property. You should be able to qualify for a 30-year amortizing fixed rate mortgage loan from an approved mortgage lender. On our website, and I'll give you that information in a little bit, you'll find a list. I think we have over 50 plus now, different banks and mortgage companies who've been approved to work our program. Should have must have acceptable credit, so we don't work with any type of high cost subprime loans, adjustable rate mortgages, or interest only loans. And then your lenders, when you go to closing, they must establish an escrow account for your taxes and insurance. You are required to take 8 hours homebuyer education course from a HUD certified counseling agency, and that course must be taken within a 12-month period of the receipt of the application when you apply with us. Every applicant that comes through our program must be able to invest a minimum of $1,000 toward the purchase of the home. So any monies that you put down for earnest money, if you pay for an appraisal out of pocket, you pay for an inspection out of pocket, those out of pocket expenditures, we will count that toward meeting that $1,000 minimum investment. In addition, you should also be able to have at least 2 months reserves in liquid assets available after closing. 2 months reserves being whatever your mortgage company has determined your monthly mortgage is going to be. You need to have at least twice that amount available in checking or savings account once you're closed. And that's for emergency funds, as Marianne talked about earlier. You want to make sure you have some emergency funds available. When it does come down to liquid assets, you are allowed to have up to $10,000 in the bank. Any assets above $10,000, you've got to put that the excess amount toward the purchase of the property. Ineligible participants would be members of Dallas City Council, any City Council board appointee, Department of Housing, Neighborhood Revitalization employees, and any employee, official, or agent of the city, and this includes family members of the above, who exercises any policy or program decision-making function with this program. And this even extends for a period of 12 months beyond the individual's disassociation with the city. Okay, earlier I talked about we have 3 different extensions of the program. The first is what we call our traditional program. We call this our traditional program because it is federally funded. We receive funds from HUD on an annual basis to provide assistance with this program. So with the traditional program, this is available for households with incomes that are at or below 80% of the area median income. I have an income chart coming up in a little bit, so we'll go over that. But for this program with the federal funds, the household income must be at or below 80% of the area median income. As far as the funding, depends on where you purchase. If your purchased property is located in a high opportunity area, and those are areas within the city of Dallas where the poverty rates are at or below 20%, that buyer has access to up to $60,000 in assistance. Anywhere else within the city of Dallas is up to $50,000 in assistance. There is a sales price limit of for an existing or new construction. The limit is 271,000. This does change annually. Usually it changes by June 1st. It hasn't changed yet. So we're still waiting on the update. So as it stands, as of today, it is still a sales price limit of 271,000. The assistance is considered a deferred forgivable interest-free loan with forgiveness occurring annually based on the residency term of the loan, or what we call the affordability period. Partial payments are due if you sell the property or you are no longer occupying the property as your primary residence, then partial payment is due back to the city. As I've just mentioned, it is prorated on an annual basis, the forgiveness. So whatever's left on the loan will be due and payable to the city if you no longer live in the property as your primary residence through the end of the affordability period.
Hey, Tammy.
Yes.
Fannin. Hey, Fannin. Had a question about the AMI chart, about where that can be located and how
Yeah, I'm getting ready
frequently it's
to
updated.
show it now in a couple of slides, but it's
Okay.
also, it is available on our website as well. But I'll show that to you in a little bit. With this traditional DHEP program, based on the amount of assistance that you receive, the affordability periods are layered. So if you receive under $15,000 in assistance, that is a 5-year affordability period. You have to live in the property for at least 5 years. After that 5th year, it is totally forgiven, and is forgiven at 1/5 per year. Assistance from 15,000 to 40,000 has a 10-year affordability period, forgiven at 1/10 per year. And then assistance of more than 40,000 has a 15-year affordability period, and it is forgiven at 1/15 per year. Our second program that we have available is what we call our Targeted Occupations Program. And this program is targeted for those who are in educational instruction, librarian services, healthcare support, technical positions, protected services to include fire, police officers, security officers, any protective type service job. Their household income must be above 80% of the area median income, but not more than 120% of the area median income. The maximum amount of assistance is up to $50,000. Because this program is actually funded by general funds, no federal funds involved in it, it's funded by general funds. There is no sales price limit. So the sales price is going to be determined by your mortgage lender based on your mortgage qualifying income and credit. So they're going to determine how much home you can afford based on your income and credit. But the caveat with this is your housing payment may not exceed 35% of your monthly gross income. It has a 5-year affordability period. And again, it is considered a deferred forgivable loan, forgiven at 1/5 per year. And then this is our newest program, anti-displacement homebuyer assistance, or we call it DHAP 10. How this was just approved by City Council back in February. What we were finding is a lot of current Dallas residents were looking outside of the city for affordable housing options. So in a way to retain them in the city of Dallas, we came up with this program. So it is for home buyers who you have to be a current resident of the city of Dallas and have lived within the city limits for a period of 10 years. Can be collective, it doesn't have to be consecutive. So any collective number of totaling 10 years living within the city limits of Dallas. It is for households with projected incomes of at least 50% of the area median income, but not more than 120% of the area median income. So you'll see this is allowing for a little bit higher incomes as well. The maximum amount of assistance is up to $50,000. And again, with this particular program, because it is funded with general funds, there is no sales price limit. So your sales price is going to be determined by your mortgage lender. And again, the housing payment may not exceed 35% of your monthly gross income. And it has a 5-year affordability period as well, forgiven at 1/5 per year. So here's our income chart. So these figures are as of recent June 15th. So what I've done here, I've published the 50% AMI, the 80%, and the 120%. So with the traditional DHAP program, it requires household income to be at or below 80% of the AMI. So let's say you have your household size of 2. Your combined annual income cannot exceed $66,000. Okay. With the targeted occupations program, the projected annual income has to be at least 80%, but not more than 120%. So back to household size of 2, your minimum income, you've got to make at least 66,000, but not more than 101,376. And then with the anti-displacement program, you've got to be at a minimum of 50% AMI, but not more than 120%. So again, with the household size of 2, you've got to make at least 41,250, but not more than 101,376. And this actually is available on our website as well. Okay, property requirements. So the purchase property must be located within the city limits of Dallas. Whenever you're searching for a property, there are some areas that, like the Grand Prairie, near Grand Prairie, the Mountain Creek area near Grand Prairie, it may have a Grand Prairie city address. What you do is you take a look at the Dallas County Appraisal District to see where the property taxes are paid. If the property taxes are paid to the city of Dallas, then that property is eligible for this program. So again, the properties must be located within the city limits of Dallas, or check to see where the city taxes are paid. If they are to the city of Dallas, then it is an eligible property. The properties must appraise for 100% of the sales price. So we don't allow you to pay more than what the property is actually valued at. You can purchase a single family home, a condominium, or a townhome, or a 1 to 4 duplex type unit. Properties that are existing properties, you can purchase either an existing property or new construction. With existing properties, it can be occupied by either the owner or the borrower who wants to purchase that property. But if it is tenant occupied, that property has to be vacant for a period of 60 days prior to the execution of the sales contract. Every property that comes through our program has to meet the city's minimum housing standards, and that includes lead-based paint regulations. So we will send out a city inspector who will do a visual assessment to make sure that the property is safe and decent for you to move into. Our inspection is for the benefit of this program only. If there are any repairs deemed needed to meet minimum standards, those repairs must be completed by the seller before closing. Now, we recommend to our home buyers, it's not a requirement, but we strongly recommend that you hire your own inspector to do inspection on the property, and that will help you to determine what condition it's in if you want to move forward with that purchase. We'll also provide you a copy of the Watch Out for Lead-Based Paint Poisoning notification you'll sign with us, and we'll provide you with a pamphlet that tells you how to protect your family from lead-based paint poisoning. The sellers will also sign a notice to real property owner form. That form of the seller is going to tell us what they feel the fair market value of their property is. And they also certify on this form that if it is an existing property, that it has been vacated for a period of 60 days before the sales contract was executed. HUD real estate properties, real estate owned properties. We will accept these properties in our program as long as it was built after January 1st of 1978. Now, the caveat is with these with HUD real estate owned properties, they do not allow for repairs to be made prior to closing. Whereas with our program, any repairs needed have to be done prior to closing. So if you're looking at purchasing HUD REO property, again, it has to be built after January 1st of 78, and then it's got to be in 100% good condition where there are no repairs needed. FHA 203K loans are not eligible for this program. Those are repair loans. So sometimes people will, they'll purchase a property and they'll get a 203K loan to make the repairs on the property. We do not allow that with this program. Okay, our funding determination. So once you have an executed sales contract, we're going to take a look at and determine the actual amount of assistance that you need to close on that property, knowing that the maximum amounts will be either 60 or 50,000. So what we require from your mortgage lender, once you have signed a sales contract and your mortgage lender has underwriting approval for the mortgage loan, we require from them to provide us a preliminary closing disclosure that's going to give us a summary of your loan. It's going to also give us an estimate of all the closing costs. That includes the lender fees, title fees, escrows that they're collecting, prepaids, and any applicable credits that you may get. Sometimes sellers will give you a credit toward closing costs. So we take a look at all of that to determine the exact amount of assistance that you need to close on the property. It may be for the full 50,000 or maybe less, but it's going to be, we will make that determination to let you know exactly how much you need to close on that property. So when the mortgage lenders are looking at loan approval for you for the purchased property, there are debt to income ratios that they have to follow for us to approve our funding. First, we have is our housing expense ratio, which is also known as the front end ratio. The housing expense to income ratio is your monthly mortgage payment. What percentage of that of your monthly gross income? That payment cannot be more than 35% of your monthly gross income. Then we have our total debt to income ratio, which is also known as the back end ratio. This is your mortgage payment plus any other monthly obligations that you have. Those combined cannot exceed 45% of your monthly gross income. Once we've made the funding determination, you will be required to sign a homebuyer written agreement for the assistance. This is a loan agreement between you as homebuyer and the city of Dallas, which tells you how much assistance we're providing, what your affordability period is, and then other requirements for you to receive the funding. Our loans are secured by a second lien on the property. It is a soft second lien, but there is a lien that will be placed on the property for the affordability period or the terms of the loan. Once you've met the affordability period, then the lien will be released from your property. And then funding is provided at an approved title company on the day of closing. So funding sources that we use two sources of federal funds, one being the Home Investment Partnership Program, the other being the Community Development Block Grant Program, and then that's for our traditional DAP program. Then with the targeted occupations and the anti-displacement programs, they're both funded with general funds. Subsidies are subject to fund availability on a first come, first served basis. Acceptance of any application for DHAP in no way constitutes a commitment or obligation on the part of the city of Dallas. No commitment is made or implied until the city of Dallas has approved funding for each application. And due to funding limitations, no applicant should assume any commitment, even when an applicant must expend personal funds to meet application requirements. So how to apply with us? So we do require our applicants to pre-qualify with us. You go to our website, which is listed there. Our application is now an online platform. It's called Neighborly. So we have a link available on our website. You click on that link, you create a profile, and then you start your application. There are required documents that are needed for us to review to determine income determination. So on the website, there's a section that says how to apply, and it outlines steps that you need to go through. Step 1 is taking the homebuyer education course. For first-time home buyers, especially, I always recommend you take the homebuyer course first, so you'll know the ins and outs and what to expect through the home buying process. It's just like if you go out to purchase a car, you want to research the car that you're looking at, you want to do your research on it, because this is a major investment that you're making, and you want to make sure that you go in knowing what you're walking into. So I always recommend taking a homebuyer education course first. Second step is to get mortgage pre-qualification from a DHAP approved lender. On our website, there's a link you'll see that has a list of all of the lenders who are approved with us and their contact information. And then step number 3 is submitting the application. That's where you'll find the link to our online platform. You'll also find a link to the with a list of all the required documents that you need to have. Those documents, what I would recommend doing before starting your application, get the list first, start gathering all of your documents so you'll have them together, because you're going to have to upload those documents into our system. So get your list first, start pulling your documents together, and then start the application. And once you submit the application, we'll get notification of your submission. We'll review it. Our process to review it takes anywhere from 7 to 10 days to get the determination met because of the current volume that we're receiving. That will be how you submit an application. And if you have any questions, just feel free to give us a call at that number listed below. And that is all that I have. So I don't know if you want to do questions now, Annie, or if you want to wait till.
Yeah, well, let's go ahead and do questions
Okay.
since you're in presentation mode there. So let's go back. Can you see the questions there? Or would you like me to read them off to you?
If you could read them off to me, that'd be great.
Sure, sure. All right. So can't remember if you answered Ms. Wise, but she asked if a person teaches dance, would they be qualified as an educator?
No.
No.
No, if you have to be in educational instruction. So teachers, counselors, someone in a field of education.
Okay.
Yeah.
All right.
I'm
Ms. Wise, do
confused.
you have any
Hold on.
follow-up on that,
Hold on.
or?
I do, because I don't understand. So who she works for Dallas Black Dance Theater. And what her job is that she travels from Fort Worth all around the Metroplex, and she teaches a dance class inside of their school. And it replaces, for the 8 weeks that she teaches it, it replaces like a piece of math or English. And what she teaches has to be tied in with whatever the education that they're teaching inside of class. I know it sounds crazy, but that's what she has to do, and she has to
So
create
she
it that
is
way.
tied into the educational field.
Yeah, she doesn't teach inside of Dallas Black Dance Theater. She teaches inside of middle schools, elementary schools, high schools, and she travels to each one of them and teaches them. It's basically, she's going to schools that most of them have free lunch and they don't have arts programs.
Okay.
And she teaches those programs because the schools are lacking those arts programs.
Okay, so it's really considered a course, basically, even though she's not in a
during the
traditional
time,
school, it's considered
during
a
the time
course.
she's
Okay,
there.
then yes, yes.
Okay.
Yeah.
All right. All right. Thanks for that clarification.
Thank you.
Let's see. Marianne mentioned as far as HUD increasing those income limits, it does come once a year. So around this time, usually that's when we'll get that increase. Well, if there's whatever changes.
Yes.
Gonna be, right.
Right.
And does DHAP have a list of home inspectors, like an approved list?
No, we do not. You can choose, if you're working with a realtor, that would be your best bet to see if your realtor can recommend, but we don't have a list of approved inspectors. No, we don't.
Okay. And Ms. Elkins, I think you asked for the email address. I'm assuming you're wanting a copy of the presentation. If that's the case, you email info@southfaircdc.org. But if that wasn't your question, please, let me know.
Mhm. Or if she's wanting information, she can visit our website. It is all outlined there. So it's the website is, let me go back. There.
Okay, thanks, Tammy.
Mhm.
Let's see. Shanay says, Shawnee, I'm sorry, says, can you pay off the loan early? And will there be any penalties?
There is no penalty. You can pay it off early and we will release that lien.
Okay, good deal. And Ms. Starks asks, if you're approved for traditional DHAP, is there a chance that there won't be any funds available if you wait to purchase a home towards the end of the year? Is it better to purchase at the beginning versus the end?
Right now, we actually have plenty of funds available where it's, and we get an annual allotment of funds every October. So we're really in no danger of losing funds.
All right, yeah, October's around the corner.
Mhm.
Okay. Well, thank you, Tammy, very much. I appreciate your time as
Sure.
always. You're always so helpful and so willing to help us out. We thank you.
Definitely. Okay, let me figure out how to stop sharing now.
That's okay. I think I can stop you.
Okay,
There we
good.
go. All right. Okay, Hario, you are up next. I'll let you introduce yourself and you can share your screen. Are you there, sir? Or you're muted if you're
Sorry,
talking.
I was muted. I was muted
Pleasure.
now. Yeah, so thank you guys for just giving me a few minutes to come and talk to you guys and give you a little bit of information about the home buying process. I'm with PNC Bank. PNC Bank is right now one of the top, the fifth largest, top five largest banking institutions. So we have some pretty good loan programs, and I'm part of the affordable lending team to uh, partner up with organizations like SouthFair to provide home buyer education. Let me go ahead and share my screen and let me know when you guys. Okay, you got everybody see it there?
We can see it. You're good.
Okay, cool. See if we can do a better view. All right, so just no, I'll go briefly because I know everybody's time is valuable, and I don't want to take up too much of your time, but just try to hit the main points and just a little bit of an overview of the process of getting ready to own your own home. Feel free to ask me any questions or also just put them in the chat. But the main thing is, buying a home is a process, and you want to make sure that you're ready and that you're ready for yourself, and for your family, and that you figure out what you can afford. Right now, we do have a situation where interest rates are high. Dallas definitely prices have gone up. So, but there's still a lot of purchase activity. So people, if it's the right time, if it's when it's the right time for you, then definitely I would say go ahead and do it. Some people are kind of waiting, but you're gonna talk to yourself, talk to your family, and know in your heart whether it's the right time for you, and you'll know, right? So there are reasons to buy a home. There are many reasons. Feel free to put in the chat what you may think could be some reasons, but that could be because you want to live close to the schools where your kids go to school. You're tired of paying rent. Those are some of the reasons there. But equity is one of the main reasons. The idea is that you're buying a home, you're buying an investment. For most Americans, buying a home is going to be one of the biggest investments that you're going to make in your lifetime. So the idea is that you buy a house, as it builds in value, you're building equity. So equity equals the market value of your home minus what you may owe at the time. It can either increase, stay the same, or decrease, right? Most of the time, definitely in Dallas and Texas, they've been going up. So that's a good thing. Um, what are some of the factors that could affect the value of the home? The area, the economy, other homes in the area. But what we've seen for the most part is that home prices continue to go up, home values. So definitely a good time to get in it before later. Okay, so briefly steps to buying a home. Number one, get ready. Decide if you're ready to buy a home. Figure out how much you can afford. So that's going to be speaking to a loan officer, whether it's myself or any other banking or mortgage institution. That'll help you do a pre-qualification. They're going to check your credit history. They're going to look at your income situation. They're going to look at your down payment and figure out really how much you can afford. Okay. Then you're going to figure out the financing. As you talk to your lender, you may want to shop around for a couple other mortgages, right? Because they may have a better rate. They may be able to offer some closing cost assistance. Normally, I recommend about two or three lenders that you shop with or that you look at to see which one is giving you a better deal. And there we see a difference from pre-qualified to pre-approved. Our process is whenever I speak to you and we pull your credit, I can issue you a pre-qualification. And then at that time, I'll say, well, go ahead and send me all the documentation and I'll submit that to our underwriting team. Once our underwriting team reviews everything, and they're okay with the structure of the loan amount, then that'll be a pre-approved. So that sometimes helps when you're out there shopping for homes and there may be multiple offers. When you come to them and you say, hey, I've already been pre-approved through underwriting, that sometimes can help you win that deal. And that's something that you work with your realtor. Once you talk to your lender, you've kind of decided who you want to go with. You're going to talk to your realtor. So you're going to talk to them, help them. They're going to help you find your home. You're going to let them know what you're looking for, what area, how many bedrooms, how many baths, the square footage, all that. And that's something that I'll work with your realtor. Will be at your team to help you buy a home. The next step would be to buy your home. Your realtor will make an offer on that home. There may be some negotiation there as to the price, some of the things that they're going to pay for, the closing date. I know Tammy said consider getting a home inspection. That's definitely something I recommend. A home inspector is going to be a third party that's going to inspect that home, and they're going to tell you everything there may or may not be wrong with that home. The bank does an appraisal. So remember, you have an appraisal and you have an inspection. The appraisal, the bank wants to know how much the house is really worth because they're lending you on that amount. And the inspector, they're going to tell you everything that's good with the home. Okay, so the AC, the roof, everything. And then after that, you want to maintain your home, whether it's the yard, a few years down the line, the roof, anything, all the upkeep that comes with the home that if you've been renting, maybe a little bit different, right? Because we used to just calling the maintenance, they come fix that, but now this is your home, this is your investment, so you got to take care of it. How much can you afford? Okay, really, that's the question for you. I can tell you how much you can afford according to the bank, how much we will lend you, but you're going to want to know how much you feel like you can afford every month. Okay, because especially if you're a first-time home buyer, you don't want to go out there and just buy the biggest house on the block. You may want to, it's your starter home. You may think, hey, I'm going to be living here for 5-10 years while the kids get a little bit older. Then I can sell that home, buy another one, or maybe make it a rental home. That's how we continue to build wealth. But the bank is going to look at the debt to income ratio, and they'll talk about that here in a couple of slides. This is the spending and savings plan method. This is more of like kind of what you, what your budget, what you want it to be. But we'll talk about the debt to income ratio in just a second. PITI, that's your monthly mortgage payment. So when we calculate your debt to income ratio, we want to know how much that payment is going to be. And in that payment, we're going to include the principal, which is the amount to repay the loan, the interest, because you're paying back the interest on the loan, the taxes, and the insurance. So that's PIT. That's what is going to be included on your home payment. The principal, interest, taxes, and insurance. Again, there are additional costs, one-time costs, which will be cost at the origination of the loan, and then ongoing costs as you own the home and continue to maintain that home. Debt to income ratio. So let's see how can I show you guys this. So your debt to income ratio is let's say, for example, and if you guys have a calculator there, and I like to just go briefly through a quick example. So let's say somebody that has an income of $6,000 a month. Okay, so so that there, that's, you can't really see that. Okay, but so $6,000 a month. Depending on the loan program that you use, the banks may go to as high as a 50% debt to income ratio. That doesn't mean that you want to go out there and max out your debt to income ratio, but sometimes a bank will approve your loan up to that amount. Also taking into consideration down payment assistance, where they may have their own debt to income ratio, and we want to make sure that we stick to that so that you can qualify for that down payment assistance. So $6,000 a month. Let's take, for example, a 45% debt to income ratio. That's $2,700 a month, right? $2,700 a month, and say monthly payments, you have about $400. And I'm talking about things that appear on your credit report, like your credit cards, your car payment, personal loan, things like that. So in this situation, let's say you have a $400 monthly liabilities, then that would take down that payment, or that available payment, to about $2,300. That would say that you're able to afford a PITI payment of about $2,300. So that's got to include your taxes, insurance, your principal, interest, taxes, and insurance. That's how your debt to income will work. But that's something that you're going to want to work with your loan officer, and they can work with you on that. Because again, it could be that certain programs qualify you for a little bit higher amount. It could be that you just don't want to max it out. There's a lot of things that come into play. That's in a nutshell. That's how you qualify for that's how you calculate your debt to income ratio. Any questions on that? So here we go. Here's a brief overview. So in this situation, this person has a 54% debt to income ratio. The takeaway from that small section, buying a home is a process. Start by making sure you're ready to buy and figure out what you can afford. A lot of times I talk to people and, hey, I got to buy a house. I say the first step is do that pre-qualification with the lender. Figure out what you can afford, how much down payment you're going to need, what your payment is going to look like. Because even if it comes up that you're not ready at this time, also your credit score, even if it comes up that you're not ready at this time, at least you can set a plan in place to where you're going to be able to do it, whether it's 3 months, 6 months, or a year. Right. So even if at the time you may not be ready, but we can figure out a plan to make it happen within, in the near future. Again, talk to a couple different lenders. There are different lenders that have different interest rates, different financing fees, origination fees. So that's where you may want to shop it around a little bit.
All right,
Types of
did you want to answer a few questions in the chat before you go on? Okay, let me
let's see.
scroll back up here.
So, Marianne, Heido, what does the minimum credit score for PNC look for? So we need at least a 620. At least a 620. Some programs 640, but at the very least, I can do a loan with a 620. I will say there are other lenders out there that may be able to do a 600 or a 580. Again, that's why you want to look at the best option for you. A lot of times they may require a little bit higher down payment. You're not going to get the best interest rate, but that may be out there. Okay. So, but with PNC, at least a 620.
Okay. And what about the any special programs that PNC offers for those at a 620 or a different credit score that y'all have?
Yeah, definitely. So we our first time home buyers program, it's our community loan. And with that, we're going to do a minimum of 3% down payment. And then we're also, that loan is not going to require mortgage insurance. I don't know how familiar you guys may or may not be with mortgage insurance, but
please explain for everybody.
yeah, sure. In that previous slide, It's kind of going back to this. So principal, interest, taxes, and insurance. One thing it didn't explain in this slide is the mortgage insurance. So the mortgage insurance is an insurance. It's not your house insurance. This insurance is the insurance that protects your home in case of an event or a hazard. But the mortgage insurance, it protects the lender. So yeah, the only way to get around mortgage insurance is if you put 20% down, or if you use a special program like PNC's community loan, where it doesn't have mortgage insurance. But mortgage insurance protects the lender in case of default. So you'll have your principal payment, you'll have your interest payment, you'll have your taxes payment, you'll have your hazard insurance, home insurance payment, and then you'll have your mortgage insurance payment. Again, the only way to get around that is 20% down, unless you use a program like PNC's community loan, where there is no mortgage insurance. Also, just something, additional information on that is, on an FHA, you're gonna have mortgage insurance for the life of the loan. Okay, so there's no way to get around that. On a conventional loan, and as you guys get more familiar with the buying process, you'll start hearing these terms, FHA or conventional. On a conventional loan, you're able to ask your lender to remove that once you reach 20% equity. So once you reach 20% of equity, so for example, if your home is 300,000 and your loan is down to 240, at that time, you've reached 20% equity, you can ask your lender to remove. Or you can use a program like PNC's community loan, where it doesn't have any mortgage insurance. Additionally, PNC has committed, I don't know how many billions to lower LMI lending, so affordable lending. And in certain areas, we're doing an additional $5,000 in closing costs. So that's going to depend on the area where you purchase the home.
Okay. And that can be
If
used in combination with the city's down payment assistance
that's
program?
correct. Yeah, so we can layer those. So
Great.
they can use that down payment assistance. They can use the PNC grant money. If for some reason the home doesn't qualify, we would take a look at the income, and the borrower may still qualify for about $3,000. So,
Okay. Great.
So,
Thank you.
yeah, yes, ma'am. And then at any time, feel free to reach out to me, guys, and I'll be happy to even go deeper into all that. Let's see. Okay, so I think you guys understand a mortgage is a loan to buy a home. The principal is the amount that you borrow. The costs are going to be the costs that are associated with that loan. So you'll have an origination fee, you'll have title fees, you'll have initial upfront fees. And when you calculate all those costs into the loan, that's what the APR is. So you're going to want to also take a look at that APR. That's besides the interest rate, because the APR will calculate all those fees into it as well. And so here it talks about the private mortgage insurance. So I think we covered that. Other characteristics of a mortgage. So your loan amount, depending on how much you put down, depending on the house, the price of the home that you're buying, the type of interest rate. Most of the time, most people get a fixed interest rate. There are variable interest rates, but for the most part, it's going to be a fixed interest rate. And then the loan term, you're able to do maybe 10 years. We can do 10 years, we can do 15 years, we can do 20 years, we can do 30 years. Most of the time, it's going to be a 30-year mortgage, because the lower term equals a higher payment. Okay.
And Hario, can you kind of reiterate, there's no prepayment penalty? Like if someone does have a 30-year loan, they may be eager and want to pay it off
Oh yeah.
sooner?
Yeah, definitely. Yeah, those don't really exist anymore on the mortgages. They did a while back, but they don't anymore. So yeah, you can definitely pay off the loan sooner. So some people do is they add an additional payment every month. In this situation where we are right now, where we're looking at higher interest rates, if you do purchase now, what you want to do is refinance that as soon as possible to maybe a lower term, or definitely a lower interest rate once the interest rates go down. and then be able to make additional payments to pay that off as soon as possible. Definitely. Any questions that you got? Any other questions that you guys may have as I move along?
Since we talked a little bit about paying off early, can you talk about how maybe an extra like $100 on your mortgage payment helps to bring down
Yeah,
that principal? Sometimes people
yeah.
think about larger amounts, but even the smaller amounts help
Oh,
bringing that
definitely. I mean,
down.
if you're paying $100, I could calculate that for you guys. For you can do for yourself also. Um, just look up a mortgage calculator and what an additional payment would do. But even if it's just $100, that's $1,200 a month. Just doing that every year, I could see that loan going from a 30-year loan to closer to a 20-year loan if you're doing that every year consistently,
Yeah,
every month.
that's great.
So you're not only going to save time, but you're going to save a ton of money on interest. Mhm.
Thank you for that.
Yeah. Um, Two common ways to pay for taxes and insurance. Most people, depending on the down payment you have, this is again another one of those where if you put 20% down, you can say, hey, I'm going to pay for taxes and insurance on my own. That is really just a preference, whether you want to do that or not. I mean, first you got to see if you're able to put 20% down, and the lenders can say, okay, go ahead and pay taxes and insurance on yourself. But kind of just to make it easier, we can include that into your monthly payment, and that money just stays in the account to pay for the taxes and insurance. So there's no interest charge on that money. But that's really more of a personal preference. Some people may say, well, I don't want to worry about it. I just want my payment to be included in there. And at the end of the year, the lender will pay for the insurance and the taxes. Or some people may say, well, I can take that money and do something else with it, and I'll pay tax and insurance myself. So that's going to be based on your situation. We talked about fixed rate mortgages, adjustable mortgages. For the most part, it's going to be a fixed rate mortgage. The rate lock, it's going to be an important deal. Mortgage interest rates can change. They're changing on a daily basis. So, for example, if I talk to you right now on a pre-qualification, as I say, so today the interest rate is at 6.875, for example. Well, but it takes you 2 months to find a home. You just have to know that the interest rate is going to be locked based on that date whenever you actually find a home and you go under contract. When you find a home, your realtor submits an offer, that offer is accepted, and you go under contract. So the day that you say, Jairo, we found a home, here's the contract, that day I can lock the rate. So we'll usually lock it for 30 days because that's how long the process takes normally from the time that you submit a contract to the time to actual closing. So just keep that in mind, that the rate that you talk to your lender initially at the pre-qualification may be a little bit different from the time until the time that you lock it. Any questions on that one?
No, I don't think so at this time.
Okay. Tammy talked about down payment assistance that the city of Dallas offers. Different counties offer different down payment assistance programs, different office or cities. There are first-time home buyer programs like PNC has. There are some great programs out there. I encourage you guys to, see what's out there. If you're in specific professions, there may be different options for you. So here it overviews the 15-year loan versus 30-year loan. The 30-year loan is going to have that lower monthly payment, pay more interest over the life of the loan, but it's going to take you longer to pay it up, versus a 15-year. The amortization schedule, once you can ask that to your lender, you can ask them for it, but it'll give you a breakdown of all the payments. So if it's 30 years worth of payment, it's going to break down the payment breakdown of every month. So it'll say this much goes into principal, this much goes into interest. And going back to those additional payments, the way that the all amortization works is initially you're paying a lot more interest than the actual principal. And as the years go by, you end up paying more towards the principal and then more and then less towards the interest. So that's why it's important, or definitely if you're able to pay down initially more so that you're just knocking down that principal that you own. We talked a little bit about the pre-qualification and pre-approval process, shopping around for a mortgage, ask questions, get familiar with the terms so that when you look at a loan estimate, when you look at a quote from a lender, what the lender is saying. Don't be afraid to ask questions. Call me, even if you talk to another lender and you want to ask me something, that's fine. So definitely just get more familiar and have that education. Attend workshops like this so that you can get familiar with it and make better decisions. Again, your team is going to be myself or your loan officer, your real estate agent, whoever is assisting you with the down payment assistance program. You have your inspector, an appraiser. You have the seller's realtor. So those are all the people that are going to be involved in the transaction. Also the title company. The part here about making an offer, normally that's on the realtor. Different situations are different. So depending on right now, for a while last year, it was like sellers were getting multiple offers. They weren't coming down on the prices. I think that eased down a little bit. So now buyers have a little bit more leverage. But that's something that your realtor will work with you. And they'll tell you all about that part of the process. But here's some basic information: the closing date, the sales price, how much you're going to pay, how much you're going to put down, whether there's an inspection, whether the appraisal, how soon does that have to come in, all those things that are part of it. So I mentioned the home inspection already, and then finally, the closing on the home. That's the last step in buying a home process. One thing to keep in mind is, and for you guys to know, is that your lender, 3 days before you close, for law, you have to receive a closing disclosure. So before you close, 3 days before you close, you have to have received a closing disclosure, and you have to have acknowledged that you received that closing disclosure. And that closing disclosure will have all the numbers on there, the interest rate, the payment, and it's got to be exact, right? If you, for some reason, don't sign that, don't agree with that, you can't close. But that's there to protect. So keep that in mind. So some of the documents you'll be signing, it's the closing disclosure, there it is, the initial escrow statement, the note, payment options, the deed that gets recorded with the city, and tons of resources for you guys. So takeaway here is get help with the buying process. Call me, call Mary, call whoever, call family members, your realtor. Don't be afraid to ask questions. And that's, in a nutshell, the process. It takes longer than that, but
Yeah,
that's the
it's
basic.
not as easy as Hario mentioned, but he did hit on those main points that you need to keep in mind as you look to become a home buyer. Let's see. I think there's one other question I think maybe regarding Marianne put out regarding, oh, where did it go? Public records. Just referring back to, as a lender, how do y'all view negative marks in the public record section of your credit report?
It kind of depends what public records. Do you have an example of what it could be?
Hey, Marianne, do you have an example?
Okay. Can you hear me?
Normally the things that I've seen appear in public records could be things like bankruptcy.
Yes.
It could be things like bankruptcy. It could be just tax things where you may owe
Mm-hmm.
the IRS. And I would say that we'd have to look at that on a case by case basis.
Yes.
Most bankruptcies normally, depending on when it's settled, depending on whether it's a Chapter 7 or a Chapter 13, there's a 2 to 4 year waiting period on those. And then some lenders may be different. Some lenders may have different guidelines where they may be able to create exceptions on that. So it's always worth to kind of ask around, see what options are out there. So those are
Okay.
some of the things that are
And
that we
that's,
see on public records.
Okay.
can you hear me?
Yes, ma'am.
Okay, I was kind of, what I was kind of leaning towards, and that was a great job. I was kind of leaning towards, if you have anything in public records, that's something that you seriously need to look at. You know, as far as like, it could be a bankruptcy, it could be a tax lien.
Yeah.
I normally, the minute I open a credit report, I go straight to public records.
Yeah.
If you left
Yeah.
over in an apartment complex, you're going to be there. You know, and most
Uh-huh.
lenders that we work with require everything under public records to be cleared. So I
To
just
be
want to
clear.
kind of set the severity of that versus
Yeah.
losing a Sears card or, you know, Walmart looking for you or something like that. That's pretty serious, you know,
Uh-huh.
to have something under public records. So just a note.
Right. Right.
Thank you.
Definitely. So we'll just look at that and see what can be done to fix that, or what the waiting period may be on that.
Okay. Thanks.
All right.
Mary Ann, we're the same way. We want to, if there's anything on the public records, we want that to be cleared
Thank
before we
you.
can take him to closing. And we also look for on credit reports, if you have an outstanding balance due to the city of Dallas, like a parking ticket or whatever,
Mhm.
that's
Uh-oh.
gotta be
Oh, water
cleared.
bills.
Yeah.
Uh-oh.
I forgot about that. We can't,
Yeah,
we can't go to DHEP and then
you want us to give you money,
paying
but you
people
owe us
looking for
money.
it.
So yeah, you got to clear those up too.
Oh, and you know, before we get off this particular topic, and I know we're trying to wrap up, this is something very important that I must mention. If after tonight you decide, oh, I'm just going to go out there and get one of those free credit reports and see what's happening, they've made it so easy at the credit bureaus to just dispute things that you know you owe. Okay. So if you want to start a nightmare, dispute something. And it could take months to resolve it. And you've already notified the person that's looking for you where you are, that you're alive and you're still working. So they're going to be looking for you. The worst thing is that they update that. I was going to say DOA, date of arrival. What is it? Date of activity.
Mhm.
Right.
And they'll update it to today. So Hario may be looking at it and you had a repo from 2017 that was already fell off. But you done called the people because it was showing 11,000 when they came and got the car, and now it's showing 17. And by God, you want to talk to somebody about that 6,000. And you have just ruined your chances of getting a home because they're going to update you to today. And maybe for another workshop, but Hario, if there's anything you want to add to that, either correct me or make it sound as severe as it is.
No, that's right. I mean, that kind of goes back to can you guys hear me? Yes.
Mhm.
Okay.
Yeah.
Yeah, no, just the fact of doing the pre-qualification, because all that stuff is going to come up front, and then we can deal with it, rather than waiting till the last month that you got to move out of your apartment, you got to find a house, all of a sudden all this stuff comes up on your credit, and it's going to take you a few months to fix it. So that's why, even if you feel like I don't want to buy a house until another year, at least have that initial conversation so that you can start taking care of all that stuff that may or may not come up.
Mhm.
Thank you.
All right.
Yes,
Well,
sir.
thank you, everyone. We appreciate everyone's time today. I'm going to share my screen just for Marian to help highlight some. Oh, that's the wrong thing. Hold on.
Oh, no.
Share my screen just to highlight some reminders here. Marian, do you want to
right.
just tell them a little bit about our upcoming workshops?
Oh, yes. But first, I do want to make a couple of notes, if you'll give me just a minute here. I do want to thank Mr. Fannin Meadows for joining us this evening. Mr. Meadow is the Community Engagement Manager with American National Bank. And he is a very strong SouthFair supporter and has been for years. And he's also a strong supporter of one of our largest annual fundraisers, which is our bowling event that we'll be talking to you guys later, because if you haven't attended one, you definitely are missing out. I also would like to thank Mr. Brian Chapman, one of our homeowners and a good co-worker with Miss Wise. And Brian is a very successful homeowner, and he's also a very staunch supporter of SouthFair. And as a homeowner, attends probably about 99.99 of our workshops. So thank you, Mr. Chapman. Thank you again, Mr. Torres, Mortgage Loan Officer for PNC. Great job. And next year, we definitely want to do a little more competing with PNC Bank on our bowling event. Now on down to our event that's coming up July the 10th. That's going to be a Saturday, folks. Please make a note of this. We are going to have a regular speaker for SouthFair, Mr. Michael Bailey, Senior Vice President of Compliance with American National Bank out of Houston, Texas. And he travels to SouthFair often to provide financial literacy for all ages. This particular July the 10th, Saturday, from 10 to 11:30 will be for financial literacy for teens. We are hoping to see our grand star, Mr. Dallas Wise, if he can stop cooking cookies that morning so that he can join us and let us shine a light on him, because I'm going to also be needing him to encourage our other teens to become innovative, become entrepreneurs at a young age, and then return and hopefully come to SouthFair and become a homeowner before the age of 25. Keep in mind, we have limited seating for this opportunity on Saturday, July the 10th. So the sooner that you can get your teens registered, our flyer will be out soon.
Marion, let me add to that as well. Since you mentioned our become a young homeowner, we're going to have our youngest homeowner who actually purchased his home at the age of 20. He will also be joining us that day just to talk about being a young homeowner and thinking about homeownership, in your 20s. So he'll also talk about that. So
that's going to be so great. And so anyway, I wish I could let all of you adults attend, but remember, this is a teen workshop. So anyway, thanks to everyone. I want to say this again. Back to you, Miss Annie. If I left anything out, I'll be on the news next. Look for me on MSNBC real soon.
Oh, goodness. Okay. All right. Thank you. Thank you, everyone. So that is all that we have for this evening. We appreciate your time. And once again, just let us know, reach out to us if you have any other questions or follow up. Follow us on Facebook, LinkedIn, and Twitter. And also visit our website at southfaircdc.org. Thank you.
What about Miss Marion saying goodbye?
I don't know if she's still on. She did her intro.
Okay.
Okay. All right. Thank you, everyone.
Be blessed. Thank you.
Thank you.